Hello everyone and welcome back to my channel. In this video I'm going to break down a long position I took on the Nasdaq during Friday's trading. This trade follows a textbook TGIF setup. Thank God it's Friday, which is one of the simplest trading models out there. I have previously uploaded a video on my channel explaining how to trade this setup, what to look for in the chart, the underlying logic and why it is expected to be effective. During this video, I'll be sharing valuable insights and gems, so make sure to stay tuned. You won't want to miss out. And of course, don't forget to hit that like button and subscribe to the channel so you won't miss any upcoming videos. And let's get started. And if you guys are searching for a reliable and trusted funding firm, then look no further than Crypto Fund Trader, a special pro firm with immense potentials. Crypto Fund Trader offers a wide variety of asset classes for trading, including crypto with the tightest spreads in the industry. You can also explore seamless trading options with Forex, stocks, indices, and commodities, all at a competitive spreads. Unlike other firms, Crypto Fund Trader believes in giving traders the freedom to succeed on their own terms. Experience challenges with no time limits, allowing you to focus on reaching your goals stress-free. To get funded, all you have to do is to pass phase 1 by achieving 8% profit and phase 2 with just a 4% profit target. You can choose your preferred platform, either the famous MT5 or their own innovative trading platform. Both options provide cutting-edge tools and a user-friendly experience for seamless execution. What sets Crypto Fund Trader apart is its track record of success. Hundreds of funded traders have not only thrived, but also received their well-deserved payouts. Don't wait for success to find you. Take the leap with Crypto Fund Trader today. Visit their website to begin your trading journey with this promising pro firm. There is no better time to start than now. Now, before we start, for full transparency, I want you to show you my analysis, my before and after, and the executions. So here's before. I wanted to see retracement to this area right here, right? And here's after, right? And the executions. So I entered here, exited here. This is my 100k challenge account. And now let's get started with the analysis. So before, I really recommend you to go and watch this video, the TGIF trading plan. I have it on my channel. You can go watch it after this video. It will give you more insights and it has more examples. So let's start with the analysis. I'm using FX Replay for this demonstration. You can get a 15% discount using the coupon code STRANGER. Now, I opened the chart on Friday and I was only looking for longs, right? Longs or I'm not interested. TGIF or I'm not interested in trading Friday. So, and why I was expecting longs? So from Monday, right, this is Monday, all the way to Thursday, right, we were on a sell program. So the weekly candle is like this. Here's the weekly candle. Now, what do we expect? A wick. We are expecting a close above the low of the week. For example, this candle right here, you can see we opened here, right? We traded to the upside. This is probably Monday, and then we traded to the downside, and you can see this wick right here. So we are trading this wick right here. We don't have a wick here. This is small, so I'm expecting more retracement to the upside, right? Here's a candle right here, another candle right here. You can see all the candles are the same, right? So the TGIF is frequent. Every Friday you are expecting either a short position in case of a bullish candle or a long position in case of a bearish candle. So I'm only looking for longs, but we are not looking for longs out of nowhere, right? We need context and we need narrative. So how price will go long, right? So we need some kind of analysis. So what do we have here? We can see that price took this external range liquidity. And what do we expect after taking external range liquidity? We want to see internal range liquidity taken. So a fair value gap to the upside, right? That's internal range liquidity. That's how the market moves right here, from internal to external, right? Right here, internal, external. Another one right here, taking internal range liquidity and then external range liquidity, right? So, and what do we have also? We have this order block right here. So we have an order block, and let's go to the lower time frames and see what's going on. London didn't give us any long confirmations, so I was expecting the long setup to happen during a New York session, the AM or the PM. Let's go to the 1 hour time frame, and the price will hit this order block, right? And let's go now to the 15-minute. I'm going to show you what happened on the 15-minute chart. So we did take that exchange liquidity, right? And we have also taken, we have also touched this order block. Now, this is the 9:30 open. Price was missing, so I didn't do anything here. Just wait for price to give you confirmations that it wants to go long. And let's go to the 4 hour, and I'm going to show you what I was aiming for. So I was aiming for this fair value gap right here. Now, why I was aiming for this fair value gap? I told you that price moves from external to internal range liquidity. And also, you can see that this fair value gap, right, was on the 50% of this range right here. So this is what? This is premium, right? Price, if it wants to continue to the lower, it needs to retrace to premium and then continue. So this was my draw on liquidity, right? And also on the 15-minute, we can see we have all this filled swings. It represents low resistance liquidity. So we have this low resistance liquidity, and we have also this premium fair value gap. So we have a nice target, and this is called the context. We have a context. Now let's move on. And what do we have here? Can you see something here? Can you see something interesting in this piece of price action? What does this candle represent here? This candle represents an order block. We have a change in the state of delivery. Now, what do we mean by a change in the state of delivery? Some of you think that ICT is inventing sophisticated words and terminologies just for the sake of showing off or something. And this is not the case, guys. You need to focus on the terminologies. They are very important. We have a change in the state of delivery here, meaning after this candle traded above this candle right here, this is your confirmation to go long. This is your confirmation to go long. You can either enter from here or wait for a retracement to this order block right here. And why this is changed in the state of delivery? I want you to pay attention to this candle right here. This candle took liquidity from here. So the state of delivery was we were on a sell program. This candle right here, price was delivering to the sell side to take liquidity. After this candle violated this, then we have a change in the state of delivery from a sell program to a buy program, and where we want to buy, where that buy program will end. We have lower liquidity right here. We have this fair value gap right here, internal range liquidity. So the moment I saw this candle violate this, then I entered from here. I waited for a retracement to this order block right here. My stop loss was just the consequent encroachment of this wick, right? And my TP was here, right here, I guess. So, and let's see what happens. So price retraces to here, right? Price returned one more time, right? Taking into this order block, and we have what here? We have a continuation purge. You want to see this stuff. This candle right here took liquidity from this candle. So we have a continuation purge. Some of you, this is why you don't have, and you must not trail your stop loss fast. You can see that from here. Some of you, they already trailed their stop loss here, and you shouldn't do that, right? Because when price is moving up, it will do this kind of moves, continuation pairs. And after each continuation pairs, price will explode to the upside because it took liquidity. We have expansion, right? Another continuation pairs, as you can see. So if you trail your stop loss here, then you are doomed. And I believe here I trailed my stop loss to here, right? Because I don't expect price to go all the way here because we have already taken liquidity from here. So I'm not expecting price to go here. So I think with logic, not with fear. When you trail your stop loss, think with logic, be objective as you can. So now I trailed my stop loss here. Why? Because we have a continuation pairs. We already took liquidity. This wick right here took liquidity from here. We should not need to go to here. So I took my stop loss to here, right? And it is now break even. It is a break even trade. As you can see, price eventually hit my TP. And let me show you something. I took the trade on the 15 minute because I know we are on August, and August is a relatively hard month, and you will see choppy price action. Price will not just hit your TP without any this kind of moves. So I took it on the 15 minute. Imagine I took it on the 1 minute. So you can see how messy it is on the 1 minute time frame. Now, tell me, can you hold this trade for this kind of moves on the 1 minute? No, you can't. Some of you will enter here on this displacement and you will get stopped out. And this is why, guys, I always tell you to stay away from the 1 minute chart. If you are an experienced trader, and I mean 2 years under, then I don't want you to go to the 1 minute chart. It's so choppy and you will have an emotional roller coaster here if you entered on the 1 minute chart. You can see this moves right here, a choppy price action. It's just, the market doesn't move like this, guys. It doesn't move like this. I wish it does, but it doesn't. The market move like this. A lot of continuation pairs on our way to the TP. Some of the continuation pairs can go all the way to here. You can never know. And then hit your TP. And a lot of you guys will get stopped out by trailing your stop loss here. So this is why I told you, do not go to the 1 minute chart and stick to the 15 minute or the 5 minute chart. It's so easy to read. You can see that it's all easy to read and it's not that choppy, right? And you don't have to babysit your trade. You can set your alerts and just go do your stuff. And I believe this is the end of this video. If you have any questions, please DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.